Yeah, thank you. Hello, everyone, and thank you for having me here again today. I'm very happy to be presenting. My name is Nicolas Briet. I'm a lead analyst at PexaPark, and today I'll give you a bit of a tour on how increasing renewable penetration is reshaping European power markets, and that drives higher volatility, lower capture rates, and also puts pressure on the existing deal structures. And then also cover how this feeds into pricing, the deal activity, and it was mentioned the growing role of BESS. So this presentation is based on our Renewables Market Outlook 2026 that was published 2 months ago. This is our flagship report of the year. And so if you haven't seen it yet, I encourage you to download it from our website. Before we dive in, quick reminder of who we are. PexaPark is the price intelligence platform for clean energy. We cover solar, wind, and battery storage across more than 20 countries, helping buyers, sellers, and investors to navigate sort of the complex power markets through pricing intelligence, market insights, and transaction facilitation. Today we work with more than 150 counterparties in our pricing network, and our advisory team has supported more than 40 gigawatts of PPA transactions and 3 gigawatts of BESS deals across Europe. And so without further ado, let me start with maybe one key picture. 2025 was a record year for solar generation in Europe, bringing the total to around 13% of EU power mix. And that's the highest on record. By the end of 2024, solar and wind had already surpassed fossil generation for the first time, and in 2025, that shift became even more pronounced. And so, today, solar and wind together form the largest technology block in the European power system, larger than nuclear, coal, or gas. And so as this renewable penetration increases, market dynamics are becoming more complex, and that creates challenges for merchant assets. The first one being that the capture factors are deteriorating. So capture values have declined sharply across the last few years. And for instance, in Germany, capture has fallen from just under 90% of baseload to around 53% in only 3 years. Now, secondly, negative prices are becoming very structural. They occur when supply exceeds demand and there's not enough flexibility to absorb this. And so in 2025, Europe recorded more than 9,000 negative price hours. Volatility also is now weather-driven. It used to be crisis-driven. So now solar and wind variability are really the main driver, with low midterm prices and sharp evening spikes. And finally, curtailment is increasing. Grid congestion and high renewable output mean more generation is curtailed, and that reduces revenues and increases uncertainties for investors. And so obviously these dynamics are directly impacting long-term PPA values, and that has triggered a repricing on the off-taker side in 2025. It has widened the gap between the buyers and sellers' price expectations. Usually buyers anchor their expectations around risk-adjusted values, while on the sell side, they remain really constrained by LCOE, financing requirements, etc. And so as a result, the transactable price range, which is essentially the overlap between buyers and seller price expectation, where deals can happen, that has narrowed or even disappeared in some market. Here I showed Germany, and that obviously weighs on the PPA deal flow. Of course, outcomes vary very much by geography. So in Italy, expectations remain very much aligned, and so there's a healthy activity. But in Germany and Spain, it's really the transactions only occur for the most competitive projects, meeting with the most aggressive bidders. And I would say that beyond the pure pricing, the risk allocation is becoming a key point of negotiation, especially how you treat negative prices in PPA contracts. And so as a consequence, the long-term PPA volume declined by around 15% in Europe in 2025 versus 2024. But it doesn't mean that the energy transition is slowing, quite the opposite actually. If we look at PPAs and battery offtake together across Europe, investment activity remains very strong. The key shift is now not how much capital is deployed in renewables, but where is it going? And now we're seeing that it's going very much towards flexibility. And so nearly 12 gigawatts of battery capacity was contracted through a flexibility purchase agreement, essentially a PPA for a battery, and optimization agreements, and that roughly matches the PPA volumes. So overall, the story in 2025 is not necessarily less contracting, but a shift from contracting generation to contracting flexibility. And so if we go back to PPAs, as I was saying, the PPA momentum overall cooled in 2025, and that's largely due to a weaker corporate demand, but the activity remains strong overall. Spain continues to lead by far, and that's supported by liquidity and the depth of the renewable pipeline, while wind saw a rebound as buyers tried to diversify portfolios that were quite solar heavy. Italy and Poland also very much stood out. Italy benefits from supportive policies and, as I mentioned, aligned price expectations between buyers and sellers. And Poland accelerated in the second half of the year, driven by both corporate and utility demand. Now, Germany saw the sharpest slowdown, with volumes more than halving year on year. And now if we focus on Romania, overall the broader CEE region has proven relatively resilient compared to the rest of Europe. And so Romania maintained really healthy activity. This is showing the PPA activity with around 650 megawatt contracted in 2025, most of this being utilities and traders. Overall, I would say the outlook remains quite positive, and that's supported by strong fundamentals and government backing. Utilities and corporates are also over Europe are increasingly diversifying geographically into the region. However, I would say that there's still some challenges that persist in the Romanian markets. So high levels of negative prices and curtailment. There's also limited liquidity, and that constrains the off-taker risk appetite. And finally, that the CFD design also can sometimes reduce incentives for subsidy-free PPAs. And so overall, I think that this helps explain the growing role of utilities and traders in the markets, because they are the best players that have the skills to structure risk, and they're playing naturally to their strength. Mm-hmm. And finally, we have recently expanded our pricing coverage in Romania, and we can show the transactable price range. So this is still the overlap between buyers and seller price expectation. We're able to do that with our polling network. We ask every month counterparties to how much they would be willing to pay or to sell a PPA, and that allows us to have a range both on the buy side and the sell side. And so in the end, for 10-year pay-as-produced contracts starting in 2027, for solar we would be in the range of 45 to 46 euros, while for wind we would be in the range of 66 to 67 euros. And so for solar, sellers often price above CFD strike levels, with offers reaching up to 61 euros. And meanwhile, on the buy side, buyers remained anchored close to auction benchmarks, resulting in a very limited overlap between both. So as we've seen, PPAs are still a key enabler for renewable development in Romania. And if you want to learn more, of course, feel free to reach out to us. I'm happy to answer any questions also in the future.